So what's happening in the Delaware and coastal Maryland real estate markets? Hey, it's Dustin Oldfather from the Oldfather Companies. The way that we keep an eye on the real estate market is to look at the month supply of inventory. So what does that mean? It means if no more homes went to market, how long would it take to sell out the existing homes at the current rate of sale? So a balanced market is 6 months of supply. Typically, you're on either side of that, but 6 months of supply would be a balanced buyers and sellers market where you wouldn't expect much price escalation or too much time on market, but you have time to work. And where we have been is we've been in a particularly strong seller's market. So what does that mean? We've been as low as a month's supply of inventory, which means it was even tighter because there was so much demand. Even people who wanted to buy homes couldn't buy them. So it was about as fast as homes could be sold. That was right at the peak about a year ago. Where that has cooled off to is somewhere between 2 and 3 months of supply, depending on the region that you're looking at and depending on the demographic section that you're looking at. So residentially, we've had some good news. The inventory has peaked, it looks like, in February, around 3 months. So we started to see a steady escalation on the number of homes available. Days on market started to creep up, but we just saw that pull back by about 10%. So it could be an inflection point, or maybe it's just a result of the spring market. Either way, what we're seeing is we're still at historic prices, and there's still a healthy market for sellers. So good things are happening. Year over year, Q1 is down 25% on volume and number of units that are sold. Interestingly, that is corresponded with a decrease in the number of listings that have come to market. So whereas when we were in such a strong seller's market, all of the inventory was basically squeezed out. Like, people were like, well, if you'll pay me X, then I'm going to move. And people were just, cashing out and getting out of their situations in a low interest rate environment for their next property. Now, with interest rates being a little bit higher, you're not able to do it. The change is not as attractive just for the cash out. So the good news is we're still hovering around historic prices in the in the general residential segment between the 0 and 700,000. When you move above that into the mid-luxury to luxury price range above 700, at least out here on the coast, you did see the inventory creep up into a buyer's market. Last month we were at 8 months of supply, and this month it's come back down to about 5.9 months. And so the luxury market is moving a little bit slower, a little bit more measured. That said, we have a client who's looking up to $6 million, has lots of liquidity, paying cash, but they're just not able to find what they're looking for. So there still is that kind of push-pull between the available inventory, relative to what buyers are looking for. Land listings and farms, so you're thinking about acreage and what's happening there, we've moved really heavily into a strong buyer's market. It was up to almost 11 months of supply. Now that is pulled back to just around 9 months of supply. So a lot of good things happening. We're in a nice stable environment. There's liquidity. People are able to move. When you kind of look at where interest rates are heading, it's likely that we're going to continue to see the interest rate environment relax, and we're seeing more and more products. There is a very interesting grant program in Sussex County right now. It was just refunded. You can get anywhere from $10,000 to $30,000 to purchase a home. That's down payment money as well as closing cost assistance, and you don't have to be a first-time home buyer. So if you know somebody that would apply to, send me a message. We'll get in touch with them. Otherwise, that's what's happening in the market.